Welcome everybody to another webinar by MajesticTrader.com. I will be the host today. My name is Ron Lang and I'm one of the senior partners with MajesticTrader.com, and today we're going to be doing trading extremes with technical analysis. So this is going to be our quick agenda for the day. First, to give you a quick background on who and what is MajesticTrader.com. We're going to go through the techniques of actually trading extremes, give you a few trading ideas this week and what were the results that actually happened from the date of our webinar on September 20th. So who is MajesticTrader.com? Essentially, we are stock pickers. We have a lot of very good information on our website if you go to MajesticTrader.com. First, we have some video analysis not only on the market forecast but also on some of our trading ideas. Essentially, what we do as a benefit to our membership, we give these trading ideas, the video analysis, to them on Sunday night. They get a chance to review them in addition to the trading ideas within the newsletter. And then we typically will post those trading ideas, those videos, on Wednesday or Thursday of the following week to give our membership, obviously, the benefit to actually trade those ideas before we make those video analysis public. Basically, what we want to be able to do is to provide these trading ideas that are ready, that are near entry and ready for the orders to be queued up within a few days. With the volatility of the markets, obviously there are key times to actually queue up the orders. We want to give you those trading ideas as they get near entry. So who are our ideal members? Essentially, we look for active traders. Traders that look to trade 2 to 3 times per week. Occasionally we will provide some ideas on trading options to hedge portfolios or to help you out on trades, but essentially all of the trading ideas that we provide are all equity based. And it coincides with a lot of the analysis that we do on the market, and that's also included in our market commentary within our newsletter. So what we want to be able to do is, within the newsletter itself, is give you a list of all of the open positions. And within the open positions, we want to give you where the current price is, where the entry was, whether or not it's hit target, and also update the profit and loss for you to give you an idea of where things stand as far as the open positions. We also want to give you a stop loss. So this way you know when you should either take a profit or also mitigate risk. The other thing that we're going to do is give you both long and short entries. So we give you all the core information that you need to be successful to get into this trade at a good price. Sometimes on a long entry, we'll tell you to wait for a pullback. And on a short entry, we'll tell you to wait for a rise into a very key area before you take entry. And we're going to give you some key notes there to help you manage that trade. It's important that you read this before you queue up your orders with your broker. So what's included in the newsletter? Well, the first thing that you get is some expert commentary. You need to know where the market is, where it's going, what happened last week, and what to look forward into the next week. We're going to give you key levels on the S&P to look out for both support and resistance. And we also want to make you aware of key economic reports and some key geopolitical events that are affecting the markets, because we are very headline driven. So in addition to the commentary, we're going to give you the best picks of the week, some of the key things that you need to look for in managing that trade. The other thing that we want to be able to do is to give you our results. Since we've been posting our newsletters publicly since October 2010, we've never had a losing month. We've had a profit every single month since last October, and by mitigating risk and letting the winners run, we're able to yield some pretty good results for our membership. And the last thing we do is we give you a guidance on the market, where things are, where are the key levels that you need to be aware of, where you should start to take profits. If the market's getting a little toppy, perhaps you should limit your long positions, and perhaps you want to look to go short in some key areas. It will help guide you along the way. So these are all the key contents of our weekly publication. Okay, so let's get into looking at extreme trading, looking for extreme price movement. So how do we do this? Well, the first thing that we need to do is we need to scan and filter opportunities. So on the screen right now, I've given you the 6 key scans that I run every single day. As a matter of fact, on my scanner, I have these queued up to run at 5 o'clock every single day. So when I do my end of the day analysis, I can now go through and look for new opportunities for the next couple of days. Are things getting near entry? Are things in no man's land? Should I not be paying attention to them at all? How do I filter that out? So let me go through each of these for you. So the first thing I look at here is volume increase. So one of the things I want to do is look for stocks that they've had volume increasing a minimum of 25% over a 10-day average. I want to know, why is it increasing? Is it because of market volatility? Or perhaps we might be flagging some potential opportunities in a sideways market that we need to be aware of. Why is there accumulation? Why is there selling? There's been several stocks that have come onto our scanner that have had a volume increase, and then a week or two or a month or two later ended up that there was a buyout offer made. So there was accumulation being done earlier on. Volume increase can certainly help with that. Bollinger Bands, one of the key indicators on most trading platforms that really help you identify extreme price movement. So one of the things that I want to do in my scan is I want to identify the stocks that close above or close below the Bollinger Band. That is telling me that there has been extreme price movement. And sometimes this is 2 or 3 days in a row that it's closed above a Bollinger Band. Is it headed into a supplier resistance zone, or is it headed down into a support or demand area? I want to know that, and we're going to review that in a little bit. Overbought and oversold conditions. I run this scanner to identify 3 indicators: RSI, relative strength, MFI, money flow index, and slow stochastics. Now, all these are lagging indicators, but can also be a little foretelling into what is actually going to happen here with this particular stock as it's maybe coming out of a very key zone. And we're going to review that in a little bit. Wedges and channels. It's important to know if stocks are trading within a wedge or a channel, because maybe we're looking for a breakout. Or if it gets to a top of a channel, maybe we should lighten our position because maybe it's going to head down towards the bottom of the channel or of the wedge. So it's important to identify this. Now, I don't look at this as a strong indicator, but it's important to understand the price movement. Ascending and descending triangles, one of my favorites. Looking for ascending and descending triangles on a chart with the volume behind it is very, very key. Because basically what you're doing here, you're essentially looking for breakouts either to the upside or to the downside. And ascending and descending triangles could not only identify where breakouts could happen to the up or downside, but could also help you measure a move to identify a price target. Candlestick patterns. Now, there is hundreds of different candlestick patterns. Some have some of the most ridiculous names out there. But one of the things that I like about candlestick patterns is that it's very visual. And being a visual guy, I can immediately see how price action is going to be affecting a chart, potentially. And there are a couple of very key candlestick patterns that I love. Bullish and bearish engulfing patterns, morning and evening stars. Some people call them shooting stars, or they call them bullish or bearish hammers. These things are critical because the candlestick patterns are telling me, depending on where they are in the pattern, whether it's on the top or the bottom side of a trend, potential price action. And typically it's the candlestick that follows these candlestick patterns that are confirming candlesticks. So it doesn't matter what asset class you're trading, whether it's equities, futures, Forex, it doesn't matter. These candlestick patterns hold up very, very well. So once we run these scans, what do we do with it? Well, what I do is I kind of put it into a mental pyramid. and I take this mental pyramid and I run these stocks through some very strict criteria or rules. So the first thing I do from the bottom up is I pull these stocks from the scan. So once I pull it from the scan, I look at everything as a big pond, little pond theory. Same thing in sales. So what I'm looking to do is I'm fishing in the big pond to maybe take out a fish that's a little bit undersized, put it into the little pond, feed it, watch it, and then maybe it goes onto my radar screen and I potentially put in my queued order. So what I want to do is I want to take out of the big pond and put it into my little pond. So if it meets core criteria, I add it to my watch list on my radar screen. I map out the chart. I identify levels. I look for trends. I look at the volume. I will look at key indicators to see if there's oversold, overbought conditions. Is there confluence there with indicators? Perhaps there is confluence with a Fibonacci level or levels and some key zones that are on the chart. Once I do that, and after it meets the core criteria, if there is confluence, so I'm actually strengthening my odds in my favor, I now rank them on the radar screen. And I rank them as a 1, 2, or a 3. A 3 is, I love it, and I'm going to queue up this order. 2 is, I like it, I'm going to keep it on the radar screen, and I'm going to wait till there's more confluence there or it meets specific criteria before I move it to a 3. And if it's a 1, well, then it gets dropped down to this level here, because a 1 to me is, why are we even looking at this thing now? So it's very important that I rank these, because what happens is that you get very few 3s. 3s are, again, I love it, and I'm queuing up my order. 2s are, I like it. And there's a lot of traders out there that have made a lot of mistakes today and over the years and will make in the future that trade too many, I like it. Now, I'm not saying you can't make money off of stocks that meet your criteria and you like, but the idea is that too many people trade things that they like because nothing else is going on in the market, and they feel like they have to be in the market, so they trade likable trades. So it's important that you identify that, because if you like it, it should stay as a number 2. If you love it, trade it. Now, not every one that you love is going to be a winner, but if it meets all your core criteria, if there's confluence with the direction of the market and the sector, then trade it. And in volatile markets like this, if you have 2 target levels, you either want to take your profits at target 1, or at least take half of your position or part of your position off the table at target 1. Bank the profits whenever possible. So this is how we do it in this pyramid structure. Do you like it or do you love it? Is it a 3, 2, or 1 trade? Make sure that you keep your eye on the ones that you like, because very quickly with these markets, you could take it off your screen because now you hate it, or they can move up to love it very, very quickly. So when we look for extremes, there's a lot of different trading methods that we'll talk about, but it takes patience, and you might only see 1 or 2 of these per week or per month or per quarter. But when you are patient, and it does meet select criteria, which we'll go through in a minute, these trades can not only be very profitable, but profitable very quickly. I'm talking about profitable within a matter of hours, days, or within a week or 2. You might not have to wait several weeks or a month for these trades to pan out. These extreme trading opportunities can happen very quickly. We actually have 4 trading criteria that we use for these extremes. Based upon the movements in the markets, these opportunities will come quickly with significant volatility. And the key to all this is to look for low risk, high reward. So what do we look for? Well, the first thing we want to look for is we want to see the price overextended, either to overbought or oversold conditions, and preferably with a significant price increase, a minimum of a 25% increase over a 10-day average, preferably 50% or more, because the faster it's going to go into the zone, the quicker it's going to come out to our target, and we'll talk about that in a second. We want to see price go into a supplier resistance zone or a demand support zone. And we'll talk about these zones in a little bit, because if it reaches a supply or resistance zone, well, that's the last time that there were sellers there. The sellers became the buyers were there. The buyers became exhausted, and then sellers came into play. And if price shoots down into a demand or support zone, well, essentially that zone is identifying where all the sellers were exhausted, and then buyers came in to accumulate stock. So we want to use some key indicators to confirm. Now, you can do all this with price and volume, but occasionally you want to see some indicators there to help confirm and get some confluence there. Now, you don't want to wait for 10 indicators to align with the moon and the stars, but these things will help you and feel more confident when you take the trade. And the last thing is that when you go into these zones, there's a higher probability that if you see volume decreasing as it enters, or when price bases or consolidates in the zone, then you know that if it goes up into a supply resistance zone, that the buyers have been exhausted. And when volume decreases when it's in there, then you know the buyers are exhausted and the short sellers are going to start coming in, or people are going to start to sell it out as the price drops, so you can make money on the downside. So these are the different things that you should be aware of when you're looking for extremes. Now, we have a few examples that we want to go through. This is WPRT, and we have identified a very, very strong zone right here that was supply resistance. We saw price capitulate, and it jumped back up into this supply resistance area, and we saw it based and consolidated in here for a little bit. And as it was basing and consolidating in here, we saw that volume was decreasing. So as volume was decreasing, our money flow and our RSI started to turn down. So when you see this, when you play the Bollinger Band strategy, the idea is you typically take target 1 at the midline average, and then target 2 is going to be the next strongest zone below that. So target 1, target 2, and with a declining market, we hit both in a hurry, all within a week and a half, we hit that. On CLNE, clean energy fuels, essentially we saw the same thing, a strong supply resistance area. Price came down, and then this is actually one of my favorite things. When price goes outside of the Bollinger Band, gaps into a supply or resistance area, well, we're going to expect some pretty fast action to come out of there. So T1 was actually the midline average of the Bollinger Band, and T2 was the next strongest zone below that. So, this was a chance to make about $1.60 on target 1, and then if you stuck in there long enough, you could have almost made $3 here on the downside, all within a matter of a couple of weeks. Your stop is above the zone, which we'll talk about in a little bit. So as you can see here, you could have stayed in this trade a while as it based, as it went up and down. Price didn't know what it was doing. But one of the things that should have made you feel more confident, look at the volume. The volume was decreasing here. So there really wasn't much effort here to push the price that much higher. And we had significant down volume and above average volume to the downside. So we knew that this was going to slice through pretty quickly to the downside. We also saw these indicators here begin to roll over on the money flow and the RSI, which helped confirm the trade to the downside. So we also have a couple more here. First is myelin. Very interesting on the myelin chart, because we have a very strong supply resistance zone right here that we've identified in this circle. And it's also even stronger because there was a gap down, which means the buyers were exhausted. They got rid of the stock. It came down, went up very strong into the supply resistance area, and then popped out. The sellers took over. It hit target 1 very quickly on the midline average, or you could have used the next zone here as a good target, as target 2. So if you were very aggressive in this market, you could have just waited till this main target area here. But notice as it went up into the supply resistance area, volume decreased. That means the buyers were exhausted. We also had a rollover of confirming indicators, the money flow and the RSI, and that was all confirmed here. Now, for those of you that love patterns, what does this look like? The M pattern, right? M's and W's. When you trade M's and W's, a lot of times there's a retest of a zone before it makes its move the other way. You can also call this a double top. So when you see an M pattern or a double top that's in a strong resistance and supply area, well, you could look for a bounce to the downside very quickly, and with market and sector conditions, you made money pretty quickly. Let's look at SCS, same thing. Another M pattern. We see here that a strong resistance supply area was done. You can see that the buyers were exhausted. It couldn't get anywhere. It came down. It retested it to create the M pattern one more time. It actually pierced and closed outside of the Bollinger Band to the upside. We saw the indicators here on the money flow and the RSI begin to roll over, and it went to the downside very, very quickly. And when it went to the downside very quickly, not only did it hit the midline average, but it went right through there to your second target or target one, depending on how aggressive you were with this particular trade. And there are multiple ways to take this trade. Number one, you can actually take the trade as soon as it enters. You could take a half a position when it enters, and then the balance of the position 50% of the way through the zone. Your stop is always 15 to 25 cents above it, depending on what your risk management is. And then you take it to the downside. So a lot of people will also play it 50% in on a full position, stop outside of it, and come out. Some people will take it into as it goes into the supply zone, will wait till it comes out of the supply resistance area, 15 to 25 cents below, and then ride it down to your targets. So there's a couple ways to play this. We have one more chart for you that we'll show you in a bit, and then we'll show you some actual trades that just happened this past week that really fit the bill to extreme price movement. So these are some of the rules that you need to be aware of for your high probability setups for extreme price movement. First of all, price moves or gaps into a strong resistance or supply zone or down to a demand support or demand support zone. So that's very critical that you identify these zones on your chart. Volume is decreasing once price enters the zone, whether it's to the upside or to the downside. Your stop loss should be outside the zone, 15 to 25 cents, or depending on how you want to mitigate risk. Because the idea is that if price goes outside this zone, if it goes outside a supply resistance zone, well, then maybe the stock is breaking out. Or if it goes below the demand support zone, perhaps price is just breaking down and there are just more sellers than buyers, and you should just get out of the trade. Your target one should be the first strong zone above or below the Bollinger Band. Or, if you're taking it as price is extreme and closes outside the Bollinger Band, then when it goes back inside the Bollinger Band, you want to use your first target as the midline average of that Bollinger Band. And the reason why you want to do that, first of all, you're going to have to watch that target because it's going to be a moving target throughout the day, and every single day that midline average is going to move. So you do have a moving target there. Basically, it's a mean reversion. So if it goes outside, it will spring back like a rubber band back to that midline average at some point. Target 2 should be the second strong zone below the entry. So when we look at another chart here, first thing is, if we take a look at the Bollinger Band, notice it closed outside the Bollinger Band, went back to the midline. Closed outside the Bollinger Band, mean reversion, back to the midline average. Outside the Bollinger Band, went up to the midline. It kept closing outside, eventually back to the midline. So there's a lot of different things to be aware of here. This was actually a long trade on VeriSign, and you could see there was a strong demand here before the upward price movement. So we identified that here, and with the big sell-off in August, it came down to this demand zone, didn't stay here very quickly because the quicker it comes down on bigger volume, the more of a V-shaped bounce you're going to get. Closed outside the Bollinger Band into a demand support area, V-shaped recovery right to the midline average. And if you took this trade, let's say if you waited until price came out, which was about $28, and you took it to here, you made about $3.50 on this trade. Notice the up volume here is above average, and the money flow and the RSI were were rallying up over its oversold position into your favor. You can see where it's identified here in your demand support area. You can look at your confirming indicators. Okay, so what I want to do is go through some of the trading ideas that we gave on September 20th, 2011. That was a Tuesday. And all three of these trades, we actually gave 7 trades, and all 7 trades were winners. I want to just choose 3 of them here to make our point of the trading extremes. So essentially this is IACI, which is IAC Interactive Corp. And there was a strong, very strong supply and resistance zone that was created here at the end of July. And what we were doing here was waiting for this to come up into the zone. And on Tuesday here was this green candlestick. We had a beautiful morning star or bearish hammer at the top of a trend. So we felt basically that this was a high probable trade. It actually pierced the outside of the Bollinger Band. So we put our stop above here around 44.10. And we basically, there was 3 ways to take this trade. As soon as it comes into the zone, full position. Half position when it comes to the zone, or half position when it's 50% of the way through. Or full position when it's 50% of the way through the zone. The fourth way, which is even lower risk, is once it's in the zone, your entry is 15 to 25 cents below the zone itself. Either way, because we had sector and market direction, when it came out, we hit target 1 within 2 days. And remember, target 1 was the midline average, which was a moving target, so it actually came up a little bit from where we could have entered it either right away or halfway through the zone. So if you would have taken this trade, essentially you would have taken $2 profit right off the table if you took it right at entry, or if you took it almost 50% of the way through at $43, you actually made a little over $3 on this trade. And for confirmation, you could see that the stochastics and the RSI were basically rolling over in your favor. So you had to be pretty aggressive with this trade to take it as soon as it got into the zone. The second trade that we had talked about was DFS, which is Discover Financial Services. This is a very, very strong zone. You can see here again a bearish hammer at the top of a trend. So we took it from the top of its previous candle to the top of the bearish hammer to create our zone. You can see we had increasing volume into the zone. Here you would have need to have either taken it as soon as it went into the zone or as soon as it came out. And if you did that and you took it down to the midline average here, this would have been about another 2-point trade. And you could see the stochastics were in your favor, rolling over very hard. The other thing that we want to see in our favor is very good down volume, above average down volume. And that's what we got right here. So we felt pretty confident that despite the swings in this trade, that we could stay in it. Our stop was up here around 28.10, 28.20. So we actually had a ways to go, and we could have actually moved that stop down. Once it came down below the Bollinger Band, we could have moved that stop down to the 50% average of the zone. And then when it got down a little bit further, we could have moved it down to below the zone to lock in profits in case we had whipsaw action. So that was trade number 2. Trade number 3, and this all happened this week. The week of September 19th, we gave these picks out again on Tuesday night, September 20th, was Maxim. And a lot of people were talking a week and a half ago about Maxim, the great prospects for it, increased EPS estimates, and all that good stuff about the stock. Again, all good fundamental stuff that really push the stock up. But when you're a technical trader and you see this, a strong zone here that created a gap where the buyers were exhausted and the sellers were in control, and then we saw the price go up on big volume into the zone, and then we see this big shooting star bearish hammer at the top of the trend in the zone. I mean, bells, alarms, and whistles should have gone off to say this is a high probable trade. Trading extremes, I am going to be able to lock in a good high probable trade if I put my stop above this and take my first target here on the midline average. And you could see that with the market and the sector movement in your favor, you could have easily have taken $2 out of this trade very, very quickly, especially even if you got in on the next day after the confirmation that trading happened below this bearish candlestick here. You could have still made a good $1.50 on this trade on its way down if you would have queued your order. And for even more confirmation, we saw that the stochastics were rolling over here, and you had RSI rolling over in your favor. So these were three trades that all worked out, all were going into the zone, all trading extremes, piercing or closing above a Bollinger Band into a very strong supply and resistance area. So these were all low risk, high probable trades. So we want to wrap up now and just give you some basic pricing on our newsletter. Our monthly subscription is $59.95. If you took any one of the trades, again, we gave, I think, 7 or 8 of them out on Tuesday. Even if you took one of them, you could have easily paid not only for a month, but probably even an annual subscription. Basically, we have a money-back guarantee. Not many newsletter or trading idea publications will give you a money-back guarantee, and we have that on our annual subscription. So you can go to our website for more details on that. If you want to check us out, you can look at a copy and a sample of our newsletter. Just go to our website and fill out the request form in the upper right-hand corner. Not only will I send you out a sample newsletter, but also give you some additional information, such as a pretty good article that we wrote in the last couple of weeks that really called some of the turns and stock prices in the market. We'll give you a how-to document, which is a really good PDF for you to review on best uses or best practices with our newsletter as a subscriber. So one of the things that you can do is when you go to our website, you can check out some of the free videos that we have there, some of the stock and video analysis that we have on some of our trading ideas, also a market forecast that we do on the S&P every single week. You can check that out. And the other big thing to understand is that we also have a referral program, so you can inquire about that. Our best subscribers are referrals, and we understand that because we know that our expert picks are going to make you a better trader. They're going to give you an edge. We're going to help you manage that trade, and we know when you start making money, you're going to start telling your friends, your family, and colleagues, and we know that those make our best members. So we want to thank you for your attention. Also, check out our webinar schedule. We have some more webinars coming up. We try and schedule them 2 to 3 times a month, all on different lessons, different ideas, and on every single webinars, we always give trading ideas. So make sure you sign up for those. This video will be recorded and put into our membership section within a week after the date of the webinar.